Hey there, we're going to take a look at the Forex Fusion trading system. I'm going to briefly go over the indicators and what we will and won't be using as far as the template goes. Now what we've got is the Ultra Blue system with an additional indicator. These dots indicator are that second indicator. It's been added to the Ultra Blue system and it gives us really clean signals and it gives us a really nice way to manage the trade. Now there is divergence trading in the Ultra Blue system, which is why this template has the OSMA or this histogram on it. For the Fusion system itself though, we are not going to be using this indicator, so we can delete the OSMA off of our charts. We use the OSMA for different aspects because this template is very well rounded, very well suited for every single Ultra Blue trading system. But today we're going to be looking at the Fusion system. Now we've got three different moving averages. The red one is the 13 EMA, the blue one is the 34 EMA. Together they form the short-term trend. Then we have the 34 EMA and the 136 EMA. The 136 is this dashed blue line, and together they form the long-term trend. So we've got a short-term and a long-term trend made up of these three different moving averages: 13 EMA, 34 EMA, and the 136 EMA. We have a 14-period RSI as well. Now there's something a little bit different with this RSI. It uses the typical price instead of the standard closing price. It smooths the RSI out and it gives us a better filtered signal. Now finally we've got the dots. Now the dots are a 13-period high and low of the EMA. So what we're seeing is the dots are going to always straddle this 13 EMA, this red line here. So we'll have the red dots across the top, the green dots across the bottom, and they are going to give us a really nice clean entry signal, and they're going to give us a really stable way to trail the trade so that we can get as much out of the trade as we possibly can without being too exposed to the markets. Now we're going to take a look at a buy trade. Now this is right out of the manual. So I want to cover the 6 steps to a buy trade, and then we'll get right into that on the chart. So I'll throw that up on the screen now. So the first one, step 1, is identify the trend. So we want to have an uptrend. The 13 EMA is going to be above the 34 EMA. The 34 EMA is going to be above the 136 EMA. Now that gives us two term trends, a short-term and a long-term trend that are both pointed upwards in the same direction. We want the dots to be underneath the price, and they're going to be green, and we want the RSI to be above the 50 level. So step number 2 is the setup, and simply we want the price to return to the 34 EMA. We want the price to come back and touch the 34 EMA. At this point, the RSI may have dropped below 50. At this point, the dots may have turned red and have started to show above the price, but that's not important. It doesn't matter if the dots change color. It doesn't matter if the RSI changes position on the 50 level. So step number 3 is the signal. We want these moving averages to remain in order. Now, in order or ordered is 13, 34, 136. That is the ordered set of moving averages. We want them to stay in that order throughout this whole process. So at this point, now after the price has touched the 34 EMA, we want the price to close above the 13 EMA. We want the dot to be underneath the price, and we want the RSI to be above 50. And the stop loss will go underneath the most recent green dot, and the target we're going to go for a 2-to-1, but if you feel that 2-to-1 is a little bit far, I think a 1.5-to-1 is also a nice alternative. And then trade management. We simply are going to be moving the stop loss along the dots as each new dot appears. So let's take a look at the whole process. We'll go through all of those steps again, but look at it on a chart. So what we've got is the Euro Japanese yen. We're looking at a daily time frame here. Now this works on any time frame, but we're looking at the daily. We've got this nice example here. So we start out in this section here. So what we've got in this area is all the criteria for the uptrend. We want to identify an uptrend. So we've got the 13 above the 34. The 34 is above the 136. The dots are underneath the price. and the RSI is above the 50 level. Now ideally we want the price to also be above the 13 EMA. We'll have that fluctuation in and out, but generally speaking we've got the price above the 13 EMA, so that's looking good. So that is the precursor to the setup. So the next thing is the actual setup itself, and we get that set up right here. Now I'm going to change this vertical line to it'll be a dotted line. That way we can see through the line to the actual price itself. And this is where the market touches the 34 EMA. So at this point right here where this vertical line is, we are good to be looking for a long trade. Price has pulled back to touch the 34 EMA. In this instance as well, the dots have changed size. They went from the green dot underneath to the red dot on top. The RSI also looks to be just below the 50 level, and if we go one candle further, the RSI is unquestionably below the 50 level. Again, this is not an important part of the setup. We do not need for the dots to change sides. We do not need for the RSI to drop below the 50 level. This is only important for when we get the signal. A few candles later, with this white candle here, we get the actual trade signal. The signal itself, and I'm going to move this out of the way so that we can see it nice and clear. The candle has closed above the 13 EMA. The dots have appeared underneath the close of that candle, and I'll put this here just so we can see, and the RSI is above the 50 level. So we have all that criteria met for a long position. Once that candle closes, we are good to get into a trade. That candle will close, we will place our entry, we will place our stop loss underneath the dot, and then from there we'll go for a 2-to-1 target. Now what I like to do with this is use my Fibonacci tool. I'm going to go from my entry to underneath where my stop loss would be, and the Fibonacci tool, the way we've got it set out, all the different levels are shown to us. So with this Fibonacci tool, my entry, my stop loss, so I start at the entry, draw down where my stop loss will be. I've got the price for each of those. This level here is 1-to-1, and that is where, when the market touches, I'm going to move my stop loss to break even. I'm going to move it right up to break even so that I'm not risking anything on the trade. And then we'll have the option for two different targets. Going for the 2-to-1 is the way to grow your account very quickly. We'll grow it quicker this way. But the market doesn't always give you that 2-to-1. And if you're finding that that 2-to-1 is not getting hit as often as you like, you may want to then try the 1.5-to-1. It's still a good target. You're getting more than what you're risking on the trade. Now, as this trade progresses, we want to be taking our stop loss and moving it along the dots. I'm going to delete this indicator and I'm going to draw an arrow. It'll show us where the stop loss is. Stop loss is going to start out here. Once this candle closes, this very next candle will open. Now, you could technically place your stop loss underneath that second dot. I prefer to place it underneath the first dot because that gives me the most room. I want to give the trade the most breathing room. So that stop loss is going to get placed underneath that first dot. When that second dot opens, you can then start to adjust it, and this is going to start encroaching onto your entry. So once you have your stop loss moving, it is going to be moving towards your entry. It is going to be reducing the risk on your trade for every new candle. This candle will close, this blue one will open, and the dot moves a little bit higher. So your stop loss is going to get to move a little bit higher. And then we're going to do that for every new dot that opens. A new candle will open, a new dot will form, and then we will move that stop loss to the new dot. I'm going to put back my Fibonacci tool, and this 1-to-1 candle gets hit over here. And at this time, the dot isn't quite at entry yet. There will be times where the dots haven't moved that far. And if this is the case, I'm still going to move my stop loss to break even. And in this case, if the stop loss is at break even, but the dots are still underneath, I will keep my stop loss at break even until the dots start to move ahead of my entry point. So once the dot appears above where I'm at break even, then I will start to resume trailing my stop loss along the dots until the trade is closed. Now the trade will be closed by either hitting my take profit or hitting my stop loss. So the next example will be here. We're taking a look at, this is current market. So we're taking a look at another example where we don't get our take profit hit. And it's important to see this because we are going to not always have that 2-to-1 hit. We're not always going to have that 1.5-to-1 hit. Sometimes neither of our take profits get hit and we will be taken out by our stop loss. And I want to show you how advantageous it is to have these dots working with you. So we've got the market very bullish. We've got the market above the 13, which is above the 34, which is above the 136. The dots are underneath the price. RSI is above the 50 level. Great. So now that we get that pullback, pullback touches the 34. In this case, the dots turn red. In this case, the RSI drops below the 50 level. That's great. Doesn't matter if that doesn't happen. In this case, it does. And then finally, we get a candle that closes above the 13. The dot appears below the candle and the RSI is above its 50 level, and during that phase the moving averages have remained in order. So the 13 has remained above the 34, which has remained above the 136. So this one candle here becomes the entry. This is where we would enter the market. So I'm going to take my Fibonacci tool and I'm going to show this is where my entry would be and this is where my initial stop loss will go. So let's get rid of this level. I just want to declutter this as much as possible. So we can see we don't get to break even. We don't get to any of the targets, but we do get to manage our stop to this section here. So we are looking at what was initially approximately 140 pip stop loss, and we get stopped out at about 25 pips. So we were able to take a trade that essentially just went sideways and reduce the risk substantially. So for the loss that we took, we got hit just very, very lightly. It was a very small percentage as far as the loss goes, something that we could very easily recover the next time around. And this is going to happen. It's an unfortunate part of trading. It's the reason why a lot of traders quit. We can't get away from them, but we do want to do our best to manage them. That movement is followed by another setup. So we have all the criteria: price above the 13, which is above the 34, which is above the 136, dots underneath the price. The RSI is above the 50. Market comes back down, touches the 34 EMA, so we get that pullback, and then we're looking at a candle that closes above that 13. That is the entry signal. We have one dot that changed color. The RSI did not drop below the 50, and we're going to see that from time to time. Now, this dot may not have even turned either, and that's okay if it doesn't. As long as we get that market that pulls down, touches the 34, and then closes back above that 13 EMA, we're going to continue to use these dots. So entry, stop loss just below the dot, and we have a market that easily hits our break even, easily gets to the 1-to-1, and even if we're at break even, price never pulls back far enough to hit our stop loss. And then eventually on this area here, we get to follow along with the dots because we had the break even. We went from a stop loss that was down at this dot and then zipped it all the way up to that entry level. For a few candles, the market made its way towards the target, made its way towards that 2-to-1, but didn't quite get there. But for every new candle, it pulled up the dots until this one dot here, where the dot moved beyond that entry level. So now we are going to start managing the trade again. So for every new dot, we're going to manage that stop loss underneath that new dot that appears until we get taken out by the market. Our take profit will either get hit or our stop loss will either get hit. So that is the buy trade. Let's take a look at a sell trade. So we're looking at the US dollar, Canadian dollar. This is a 1 hour time frame, and I like to kind of give you different time frames and different currency pairs. But we have this beautiful setup here where all the criteria is met. So we've got all the criteria met, and I'm going to put on the slide that shows us the Forex Fusion sell rules. So it's the same as the buy. except in the opposite order. We're looking for a downtrend. 13 EMA must be below the 34 EMA. The 34 EMA must be below the 136 EMA. The dots are above the price, and the RSI is below the 50 level. And that is the precursor to the setup. Then we get the setup. So the setup is when the price pulls back to touch the 34 EMA. And again, the RSI may change sides and the dots may change sides, but it's not important that they do. The signal for this is when the price moves back down and closes below the 13 EMA, the dots switch back to the red dots across the top of the price, and the RSI moves below the 50. Now again, the dots may never have moved up, and the RSI may never have crossed up. And if that's the case, then all we're looking for then is the close below the 13 EMA, because the dots are already in order and the RSI is already in order. And then we're looking for the stop loss, which is going to be placed just above the most recent red dot. And the target, we're going for 1.5 to 1 or 2 to 1. And finally, the trade management is where the stop loss moves to just above each new red dot as each dot appears. So if I go back to the chart, what I'm looking at here is that perfect setup. So we have step 1, we're looking at the precursor to the setup. Everything is in order. The market is in order. The moving averages are in order. We've got 13 below the 34, below the 136, the dots above the price below all of that. RSI is below the 50 level. Now, in this section right in the middle of the screen, the price pulls up, gets into that zone, into that space, touches the 34 EMA. So we are good now to be looking for a short trade. During this phase, the dots switch sides. And the RSI also switch sides. It's okay if it does, it's okay if it doesn't. Now finally we get a signal to go short on this one candle here. On this candle we do get the close below the 13 EMA. Even though we have 2 candles prior to it that closed below the 13 EMA, the dots weren't allowing for this trade to happen. Finally we do get one where the dot allows for that trade to happen. We get the close below the 13 EMA and the dot appears above the price, and the RSI at this point is definitely below the 50 level. So now I'm going to pull out my Fibonacci tool and I'm going to go from where we'd enter the trade to where the stop loss will be placed. And we could see from here the 1-to-1 break even down below and the 1.5 target and the 2-to-1 target. So this trade is very easily hit. It's very nicely played out. So what I'll do at this point is grab another arrow and we'll take a look at the stop loss. So I'll get rid of this. We know that on this big blue candle the target gets hit. What I will do is draw a line at this level here. Now this line is the break even level and the entry will be about here. So let's get rid of the Fibonacci tool. I'm going to grab my stop loss indicator. The initial stop loss will go above that swing high. The second candle prints, the stop loss doesn't get to move too much. The dot isn't much lower. The third candle prints, and what's happened is it's tagged that 1-to-1. So instead of moving to this new location, we would have moved the stop loss to this new location when this candle opened, but during the formation of this candle it hits that 1-to-1 level. So now the stop loss gets moved all the way down here where the entry is. Now the next candle forms, the next candle forms, the next candle forms. It isn't until this blue candle here that we get to move the stop loss any further, because it is the one that is moving beyond that break-even point. It is the one that is now getting ahead of the market. But at this point, we would have already been taken out of the trade. So we wouldn't have had the opportunity to manage to stop any farther than that break-even level. All right, so that is a short trade for Forex Fusion. This is covered in the manual quite nicely, and the snippets that I used for those 2 different slides were straight out of the manual. So refer to the manual, watch this video a couple of different times, but that is the Forex Fusion trade. We've taken the Ultra Blue system, we've added the dots to it, and it really has cleaned everything up. This is a great way to start growing your account and keeping things really simple, really clean, really simple, and really straightforward.